Will oil companies see a resurgence in 2020 as OPEC tries to put a floor under crude prices? Let's bring in Rob Thummel. He's a portfolio manager at Tortoise and Sandy Villere. He's a co-portfolio manager of Villere's Balanced Fund. Rob, let me start with you. Do you see anything to like in energy?
Oh, yeah, Tyler, there's a lot to like in energy. You know, Warren Buffett said, be greedy when others are fearful, and everybody is fearful about energy, and that's the time to be greedy, we think, in the energy sector. Look, energy is essential, right? Everybody needs energy. Around the world, global energy demand is going up. We need more energy. So there are a lot of opportunities in energy. Now, there are some challenges, but there are a lot of opportunities, specifically at Tortoise, we think, in energy infrastructure. There's a lot of energy infrastructure assets and companies that generate high dividend yields, and investors are starving for yield in this environment where we have a 10-year below 2%.
All right, let me, before I come back to you, Rob, and get some questions about individual companies that you like, Sandy, the same question to you. Are there things that you like, targets of opportunity in what has been a dead money space for a decade?
Yeah, I mean, there's certain areas, right? If you look at the Permian, there's things there that they used to just be able to just turn on the spigot, and these guys would go out and raise outside capital, and that would put more supply on. But I don't see that outside capital now. So I'm still kind of bearish on the sector, and the fact that it is hated makes me a little bit more optimistic. But I think it's a little bit of a value trap, and I'd actually still avoid the sector.
So, Rob, why don't you address that question, it being a value trap? I know one of the things that attracts you are the dividends that these and the yields on some of these companies. Give me some names, address the question of it being a value trap, and thirdly, explain what needs to happen for your particular picks to thrive.
Yeah. So big picture, for cash flow growth will drive value eventually for these stocks. And that's what the energy sector is doing. It's building a mountain of free cash flow over the next several years. Now, that requires some cuts in capital spending, but ultimately operating cash flow of a lot of these companies that we're talking about. And what I'm talking about are companies like Enterprise Products Partners, a company that operates critical energy infrastructure assets. They've raised the dividend for over a decade. We've been invested in the company over a decade. It offers investors almost a 7% dividend yield right now. They're going to grow their cash flow year after year after year. Companies like Williams, basically, own some of the most critical natural gas infrastructure assets in the world. I don't know if you know this, Tyler, but the U.S. just became a net energy exporter. And we expect the amount of energy exports to dramatically increase over the next several years. That will be great for energy infrastructure companies, and investors can invest in companies that are growing their cash flow, because that growing cash flow will eventually be rewarded by investors.
So, Sandy, if you view energy as a potential value trap, Rob gives us a couple of names there. What do you think is not a value trap? Where would you be putting your money for 2020 for, let's say, a 2-year return?
Yeah, so we like a couple of things where the macro has kind of given us some opportunities. One, with Medicare for All, gave us the opportunity to buy a company called eHealth, which is essentially a website that they're going to make as simple for seniors as buying an airline ticket, where you can actually go in and choose your plan and do it in the most efficient manner. And again, 10,500 people are turning 65 in the U.S. every single day. 60 million seniors are eligible for Medicare. So I love those demographics and love the backdrop. And it just seems like, from a risk versus reward standpoint, seems like I can sharpen my pencil and maybe make some more calculated decisions in where the price of oil may go over the next 24 months.
Another area you like, or at least one of your picks, is in an area that was crushed in the last couple of days on the China trade story, and that is semiconductors.
Yeah, and again, another macro headwind. If we're going to get all these trade war issues and sort of headlines, it gives me the opportunity to buy On Semiconductor, which is a play on the build out of 5G. They had no exposure to 4G or 3G, but they have $100 in content per base station, which it's going to be a build out for 5 to 7 years. And I like what they're doing in automotive and with the iPhone as well. So I think On Semiconductor is going to be a solid holding over the next 24 months.